In this video, I'll be showing you how to select your buyers correctly. I think this is something that has been a very major issue to a lot of you guys out there learning how to trade, and some of you that are already making profit in the markets, but then to select your buyers, because most of you are daily traders, some of you are just making some cool cash within a day and you're out of the market. So let's do this correctly. Let me show you how to select your buyers. And if you're wondering what exactly is this, what is a bias? Bias simply means your anticipation for price directional movement, or the intention of price for a particular day, for a particular week, or for a particular month. Simply put, where money is flowing to. That is it. So now, if you are trading, you might have some assets you are keeping your watch list. Yes, this is a watch list where you basically select assets you want to trade. You basically select them intermittently. Now, I have 4 different assets here. This is just for an example. I want to show you how to do it and then how to come up with a trading idea for a day. So what I look out for is to know where my daily time frame order flow is going to. When I say order flow, I simply means where the money is flowing to. Now, I don't want to draw anything. I don't want to do anything on my charts. I want you to just look at the charts. Where do you think the money is flowing? I'm not saying you should look at this place. No, not this place. No. Not even this place. I want you to look at the most recent price action, because we are talking about an intraday trader trying to come up with a trade idea. What do you think is happening right now at this moment? I just want you to respond within 2 seconds. I know somebody is saying bullish market. Who told you it's bullish? Why? Because price is obviously facing down. Look at what has happened. 1, 2, 3 candles closing below each other consecutively. Look at this, closing. That is to tell you that price has been bearish consecutively, right? Now, if the daily time frame tells you that we are bearish, because that is the most recent price swing, we have boom, break of structure bearish here, and we can call this our lower high. This is our lower low. This is our lower high. This is our lower low. This is in between. We don't have a specific direction for it, and that calls for a careful attention. You need to pay attention to that, please. So let's go to the 4-hour time frame and see what's happening also. Now, dropping down to the 4-hour time frame, we have it. Beautiful. You now see it. On the 4-hour time frame, what you're supposed to do is to pick your drawing tools, because you're going to be drawing a lot of things here. Now, if you look at your left hand side, for instance, if I were trading here, right, if I were to be trading today right here, I want to show you an example. There's something very important I want you. There is the left hand side price action, or what you have resting on the left hand side, and also what is happening here. Now, if I was to trade on this particular day and I appear on my chart, I will look at what is the most recent price liquidity level that price have cleared, and that was it, right? That was price liquidity level. Price has just cleared that. Now we'll seek to go back to internal range liquidity, right? Which is what normally comes as retracement. So it is not a good idea for me to start capitalizing on the bearish movement and say, I want to sell here. No. Why? Because on this price range, price has done the movement to the discount area of this price range. This is the price range. When I say price range, is this, right? Dealing range. If you have not watched my video on dealing range, you can do well to go to the channel and check dealing range. So this is the dealing range. Can we say that we are in a discount? Yes, we are in a discount. How many candles do we have to call it a retracement? 1, 2, 3 candle, and then we can call this a retracement is starting. You just need 3 candles to establish that 1, 2, 3 consecutively closing. This was also a retracement, and then price moved down, but we didn't break any structure here. We are still within that range, right? So if we are coming back, we will want to see price come back into the internal range before we continue bearish. And that's as simple as that. It's as simple as that. That is how to find the buyers for here. But we are dealing with a price action for today. All right. We are dealing with a price action for today. And that is the reason why I want you to pay attention to this. So look at this. What do we have on the left hand side? Draw on liquidity. The lowest week. And what do you have? An imbalance here. Do you see an imbalance? Beautiful. And what else? Is this a breakout block? I want you to answer. Those of you who are trading ICT concept, I think this is a breakout block, right? Somebody has said yes. It's not a breakout block. It is a bullish mitigation block. You know what a bullish mitigation block looks like? This is it. Price came, moved up, have a failure swing, and boom, went up. That is a bullish mitigation block, not a breakout. We didn't sweep liquidity before that. So this is very important. Price is responding to this institutional reference point. Why? Because price has now showed interest in going back inside. Now we are looking at this particular price action. I know why I selected this asset. Please follow me through. I know why I selected this asset. So look at this. A shift in market structure bearish. Progression. Break of structure bearish. What is this? Did we close below? Break of structure bearish. So I have an interest in going bearish because all the odds are showing that the price want to go bearish. MSS. This is market structure shift. So you see it. We have what? Lower high. Lower low, lower high, lower low, lower high, and you can see relative equal lows. All the wicks are showing signs of being rejected from here. Now if I want to trade, even though I want to go bullish from this point, you don't just go bullish like that. No, just because you see price is rejected here, don't just go bullish. There are things you need to pay attention to. The 4 hour is too big of a time frame to show you what you need for a day. Remember I said for an intraday trader. Now look at this. We have a lower high here, which is our point of market structure shift. Until price closes above this guy, we are not yet bullish. What is the trend? Trend is still bearish. Trend is still what? Bearish. The trend is still bearish. And that is to say that if we are to trade today, want to go to the 15-minute time frame and find an entry on the 15-minute time frame in the direction of the bearish market until we see a shift in market structure. But then this is the major thing I want you to look at. Look at this. Look at the 15-minute time frame. I know that some of you will still struggle to take trade on GBP JPY. You see, what do you call these guys? A range. And what do you do when you see a range? You quickly, boom, you exit. You quickly exit that asset. So among those 4 assets I put here, I will now take out what? GJ. It's not part of the assets I should trade today because the bias in is unpredictable for me. You now see it. So there is something like there is no bias or there is no trade. That is another aspect of trading. You just say, I don't want to trade today on this asset, and you quickly put an X to it. Move to the next asset. Don't have more than 3 on your watch list so that you will have time to rest. Don't have more than 3 on your watch list so that you will have time to rest. Now, the next one is gold. And there are days like that, you let it be. There are many days you'll find good trades. So the days that will come with bad trades, just forget it. Let's say I have 4 of them. Let's go to gold. And we want to see what gold is preparing for us. Let's go to the daily time frame. The daily time frame. What do you say is the bias? What do you say is the bias? Bearish? No, it's bullish. Obviously, you can see from just the look of things, it's bullish. Nobody needs to tell you that price is bullish. And coupled with the fact that we have moved all the way to that area, came back and fill up this imbalance. This is what price is doing for us. Filling up this imbalance with a massive sell candle yesterday, and today we have an indecision candle preparing. What do? You go down to the 4-hour time frame to also look at what price is most likely to do. Now look at this. On the 4-hour, you will see something very interesting. Look at this. Can we call this a shifting market structure? Yes. I just want you to look at it. Can we call it a shifting market structure? Price dealt with what? Draw on liquidity. That is a draw on liquidity. And what happened? Price came massively into this. We call it a market structure shift, or what other people call change of character. And this is a liquidity clearance. Shifting market structure. Now, in this shifting market structure, price will want to seek for something, and that was this fair value gap. Let's see it. Did price touch it? No, price didn't go there. Just a little price movement into that area, and I still have hope that price is going to trade down into that. Now in this, you will now reduce your target to, oh, this is the target for the day. I want to see what price will do within this short range. And if you were somebody that is looking at this, you would have gotten an interesting point here. Fair value gap. That could have been your entry. And don't forget that price also traded into what? A bearish order block. Just touching it. Alright. So this was the bias for you. Price came back into the fair value gap, and the price movement is bearish for you on that day. It doesn't mean that you're going against the overall. On that day, that is your bias. So you want to get the smartest entry, you go down to the 15-minute time frame. If you were looking at that, this will have been your entry. This will have been your entry. Price coming into what? The point of interest, and most likely you will see that price has shifted structure here on the lower time frame, having a bearish breaker. You have this guy. What do we call this? 3 candle price action. We have 1, 2, 3, the middle candle having the highest wick, and price created this move. Now, if you took this trade from here, obviously this is supposed to be somewhere from here. We have 1, 2, 3. This is not close. This is the place for the trade. Your stop loss is here. Somebody, because this is not a shifting market structure. Obviously, I don't want to show you something that is not realistic. I want to be consistent with something that I've been doing. By the time you see this, or alternatively, if there is a chance for you to go to the 5-minute time frame, you can equally go to the 5-minute time frame, and you're going to have that place as a shifting structure. Yes, 1, 2, 3, but it's a more riskier entry for you, but then you can take the trade and have a little bit of confidence. This is a fair value gap, and we call it a unicorn entry model with a bearish breaker, right? This is a bearish breaker, unicorn entry model. So you want to take the trade. So that becomes your bias for that day if you're taking trade. Now you saw that the daily time frame traded into a draw on liquidity, and you realize that the 15-minute time frame or the 4-hour time frame is shifting structure. The 15-minute time frame is giving you some signs of going bearish, and the 5-minute time frame finally gave you that swift entry. What did I say? That very swift entry. It's straightforward when you know what you're doing in the markets. Now look at this. If you pick this, obviously if you use the 15-minute time frame, let me show you the difference. The 15-minute time frame, your entry might have been here, around here, when price finally closed it, and you have to put your stop loss there. I don't care. Do your money management correctly. All right, do your money management correctly, and that will be your entry on the 15-minute. But if you're using the 5-minute time frame, your entry is gonna be here. You see it here, right? That's your entry. And trust me, when you stay consistent with this, you will be able to make some profit in the markets without hesitation. You see it? So that is what price is currently cooking. Except if there are fundamental news that are coming forth subsequently, but then that is the trade for you to look out for. That is the bias for you, right? That is the bias for you. The next one is what was on my assets? I forgot the next one. I forgot the next one, but the video is even going deeper into a more lengthy time. I don't want to go into all of them, but you can just do some of them. Some trades, you just put an X to it. The ones you know you can select something, you can simply put a sign that shows that, oh, this one is something I can find an entry from. All right, it's something I can. Okay, I saw NASDAQ, even though it's not part of what I put there. NASDAQ. All right, let's just have a look at the futures market a bit. I saw NASDAQ today. I saw NASDAQ. And on NASDAQ, I was attempting to see, okay, so you see it. I marked it. The 15-minute time frame is telling me that price is bearish. And I saw, what did I see here? I saw this guy. So I don't need to struggle with anything. I just want to take the trade from there, and I'm very okay. We have a balanced price range here, right there. All right. You have this one, you have a balanced price range, and I was thinking price was going to push to the balanced price range, but then I saw a bearish breaker, which is very important. Also on the 5-minute time frame, if I see a shift in market structure, that is the entry. You see a shift in structure at this point. We can call it a shift in structure. This one, a shift in market structure. I am just waiting for price to come back to the consequent encroachment of this. That is the 15 minutes. And this one, some of them you don't need to struggle with finding the buyer. It's just straightforward. All right. And I want to trade. My target is initially this fair value gap. Yes. If you look very closely, you will discover that this fair value gap has not been mitigated. And that is how you can take the trade in that direction. So you just go straight forward don't complicate things. It's something very straightforward. All right. So I hope this video helps somebody out there, and if you find value here, let me know in the comments. Share this video, invite your friends to come and watch this YouTube channel. Thank you very much, guys, and I'll come your way the next time I see an opportunity to make a video. See you in my next video.